Hello everyone, welcome back to Chill Deal Trades, where I analyze the market so you know what's going on. Today we're going to be covering Facebook, FB stock. I typically do either general markets or smaller cap, but I think with the recent pullback, this is going to be a great opportunity for any of your long-term holdings. And we're going to dive into the valuation, the company growth, everything going on with the stock right now, as well as the technicals. So if you're here and you haven't subbed yet, please hit the button. And as a reminder to everybody, new schedule is Monday, Wednesday videos, and then Friday will be a live stream. Nobody commented what time they like it. I'm thinking around 7 p.m. Central Time is when we'll probably do that, 7 or 8 maybe. So keep on the lookout for that, but let's jump into things. So first thing I want to say, as we know, Facebook, a lot of stuff going on with the stock recently. News came out, whistleblower, Facebook's not an ethical company, they're manipulating you to make money, blah, blah, blah. Guess what? There's a million companies doing that in the world, and this is not new news for Facebook. I don't know how long you've known this company, but as most of us have had it for at least 10 years now, they've had lots and lots of drama. These moments where news comes out and the stock pulls back. I mean, we can even see on the big charts. All these big pullbacks, for the most part, are because of some news came out about them doing something weird or them not being moral in their ways of running the company, XYZ. But assuming that we're not at a market top, which I don't believe we are yet, before a big correction, this is a great opportunity to buy, and a couple reasons why. So the first thing I'll look at is just look at the revenue growth. 2016 to 2020. 2016, they were 27 billion. They're at 85 billion a year in revenue. Net income, 10 billion, 30 billion. This company has had insane growth, and as they've scaled, they've been able to keep up their net income. When we look at their cash, they have $17 billion in cash. 17 billion. If their platform turned off for a long time, they could sustain just on the free cash flow they have. And so this company is amazing. I work in digital advertising myself, where I do, I run ads on a daily basis, and I'll tell you is that Facebook is not going anywhere. Instagram, Facebook, their network that they have, where a lot of the revenue comes through is with ads. That's not going anywhere, and it's only going to expand. Yes, I think that some companies are going to do protests against it. It might have a quarter or two impact on their earnings. But coming into Q4 and having this transition to e-commerce in a way that we have never had before because of COVID, revenue is going to continue to grow at significant levels, and we'll look at that in a second. But all this being said, the company's not going anywhere, and we really look at their valuation here, 24 PE ratio. When we look at forward-moving PE ratio and a 17, this is honestly, in the market we are today, this is a very cheap company. When we look at the average PE ratio of a stock on the NASDAQ, is a 21. So it's pretty significantly under the average. And when we go normalized, 27. So assuming we have a 17 PE ratio moving forward from this price, this stock is undervalued. And this is one of the top growing companies on the market. As we just looked here, even if we do quarter over quarter, I mean, they've had a monstrous 2021 annually. We're going to continue to see growth. Maybe the growth will slow down, and we'll look at that in a second, but it's growing at ridiculous numbers. So for a company being valued at a 17 P ratio, which being one of the highest growing large cap stocks in the NASDAQ, this stock is undervalued. They're undervalued technically in a stock market that's obviously it's run up quite a bit, but it's undervalued almost from every perspective on this big pullback, and that's why we want to keep an eye on it. We're here to find stocks that are cheap compared to the overall market. And if you haven't already, I have a podcast every Friday night. We changed it to Friday night at 7 p.m. West Coast time. We talk about these things, and I brought up Facebook and Google back in January. I said they're amazing stocks to own. They've ran significantly from there, so always come and check out the podcast if you're an active listener. Those are a couple of things. So the next thing I want to dive into is the finances. So as we mentioned, PE ratio, when we look here, 23, it's the cheapest stock on this list of their quote-unquote competitors based on this. based on this, I guess this competitor list. But what I really want to get to is the numbers, financial. So just looking at their detailed finances as we kind of looked over, but in a more detailed way. The main thing I want to look at is this year-over-year or this quarter-over-quarter growth. So let's go annual real quick. I mean, for a company this big to continue to grow over 20% a year is absolutely insane. I've done a video on Google. Go back and watch that. Very similar. These companies are growing at insane rates. We are seeing a little bit of slowdown here, in the more recent. I don't know where that price was, but I mean, this last year we're seeing really big growth. When we get to projections, that's where I'm getting ahead of myself. We are going to see, at least analyst expectations, a little bit of growth, a slowing growth in 2022. And really, when we look at that number, the only reason that's happening is because 2021 and the end of 2020 were such big years. With COVID, all retail stores shut down and everybody went to selling online. And when everyone sells online, more people are spending money on advertising, which grew Facebook's revenue. So this is an industry I know quite a bit about, guys. I'm just not making these things up. I've done this for many years. And so we are going to see a little bit of decrease in growth just because end of 2020 and 21 were such big years because of COVID and the shift to e-commerce. But when we look at overall, let's go back to the finances. Something I always like to look at is net income. There's a lot of things to look at, but the main thing is net income. And even though we see revenue slowing, maybe a little bit in terms of growth percentage, when we look at net income, I mean, back in 2018, it was, I think it's probably 5 billion or something. I don't know what this 500 billion. I don't know what this net income number is, but I think it's 5 billion. But when we look at, say, what quarter was that? That was 630. So when we look at 630 of this year, they're at 10 billion. So that's double in just a few years. That's pretty insane for a company this big. So everything's looking very healthy. The only main thing is this slowdown in growth in 2022, which I'm not here to give projections on the market because we never know what's going to happen, but we all know the markets are very hot. There's a lot of risk, I would say, on in the markets when we look at the long term in terms of the next 2 to 3 years in terms of long term and some of this slower growth. But for now, I think things are going to continue to be good for Facebook. Might go sideways for a little bit. We'll look into the chart in a second, but this is going to be an amazing company to hold, and this 16% pullback is a great buying opportunity to start accumulating shares if you don't own any yet. The last thing I want to look at, because it's not all green for this stock, is insiders. So obviously insiders, so these are people inside the company that own shares. They've been selling like crazy over this year, and why not when the stock has ran this significantly? It only makes sense. But one of the really interesting things I see here is Mark Zuckerberg selling a lot. As we go through, I mean, Mark Zuckerberg looks like one of the main sellers over this last year move. Who knows why, but I think it's interesting. It's very interesting that he's selling specifically because he's a CEO. We'll see how much longer he'll be the CEO if some of this news continues to come out, which could be a negative for the stock, but maybe a positive, who knows. But that's something really interesting. I've said this in past videos, I don't love to see when insiders sell, but with the stock that's moved this much, I think it was like $15 a share when it IPO'd. I mean, at the price it is now, that only makes sense. And the last thing is just insiders. So insiders are still buying, or institutions, are still buying more than they're selling. That's very bullish. We are seeing the difference in buying and selling start to get smaller and smaller, which from that perspective tells me, okay, people are finding this maybe a little less appetizing. Maybe they're finding other things on the market. But on this big pullback, when we really look at it, we do see some increase in percentage on big people who own a lot of shares. So the biggest one to call out is on 10.5. They own 144 billion. They added 33% on this pullback. That's pretty significant. So someone believes in it for some reason. A couple say negatives from when the market started to turn over. We did have these two 500 billions slightly pull back 1%. But that's not really a big deal. When we look at it holistically, there's a lot of green here on the dip buy, and the red, if it is red, for the most part, it's just a few percentage. So people are taking a little bit of profit. But overall, we're still seeing a lot of green, seeing more green than red, and that's what we always want to look for. So lastly, I just want to look at the charts. So the main callouts here is RSI is the first thing. So RSI did hit oversold. And when we look in the long, this is the daily chart, everyone. When we look in the long term, you know, it hasn't hit oversold very often. COVID low back here in January. I think there was some drama back in January as well with Facebook. Just a couple times. So what we know is Facebook doesn't hit oversold very often. We did have a period back here, I think it's 2018. I think that was when some drama happened as well, where they did have a big pullback. I think that also when we had a little pullback in the market, I don't remember off the top of my head, but it did stay down there for a little bit. So that is a possibility that we do see a little bit more selling off. That's why I'm not telling you to buy now. I am personally, if you ask me, not buying now. If you want to see my full portfolio or support the channel, you can support me on Patreon. You can go look at that in the description. $4 a month just to support the channel and help me continue to make videos for you guys. So we could see this kind of scenario where, you know, it stays in this oversold for a while. But what we know about Facebook stock, when it gets oversold 4 times out of 5, it doesn't stay oversold long. So a couple price points we want to look at. We do have a gap here at 338, which is also pretty significant resistance. So we kind of had this accumulation back here before the breakout happened, and now we're back in that accumulation zone. So honestly, unless the markets rocket back to new all-time highs, when I say markets, I mean QQQ, which is a NASDAQ, I could definitely see some accumulation here for a little bit longer. And then we'll have to continue to look at the charts again to figure out if that could be showing a move lower or a move higher. One of the big important calls here on the daily is we did hit the 200-day EMA. The 200-day SMA, which is simple moving average, is a little bit lower. I think it's around 315. So we could still see support down at the 200-day if we do break lower around 315. That's a personal price that I'm looking at. I realized I wasn't looking at the 300 EMA or 200-day EMA, and it did bounce off that, but we still do have the 200 SMA around 315. So that's personally a price I'm looking at. And we look at that, that's in this kind of accumulation zone. So if we do break lower out of here, we could get caught back in this accumulation zone, which is 315 to about 300. But those are a couple prices to look for. This gap fill is really important. That would get us out of this accumulation zone, which is a pretty big deal. But then we have the 100 EMA up at this next, I would say, pretty important resistance zone, which is between 344 and 347. And we have the 100 MA there, or EMA. And so I honestly could see this kind of just hitting back and forth here. If we see the NASDAQ sell off again to go a little bit lower, which is a possibility, we still haven't seen a bullish breakout on the QQQs. You can go to my TikTok. I posted a video yesterday on the QQQs, chill trades on TikTok. So we haven't seen a bullish breakout on the QQQs yet, even after today. So this doesn't confirm anything yet. And honestly, if the drama continues with articles coming out and more negative press, breaking up Facebook and Instagram, things like that, we could see some choppiness in the immediate term. But things to call out, we could go a little bit lower. Who knows? We know where the 200-day SMA and EMAs are now, so those are going to be important prices. And then this is honestly a time where you could start accumulating some shares. I do believe this is not the ultimate high of the stock market. Nobody knows that, but that's just my personal opinion. So this could be a time to start acquiring some shares, slowly build into a position for the next run up. But if we're kind of going sideways, you know, read the tape a little bit more, see what's going on, pay attention to the NASDAQ. But that's all I have for you guys. I really appreciate you tuning in as always. Please come back for more. Please comment, like, subscribe. All those things help and support the channel. So I appreciate so much, everyone. And I will see you again Friday for the first live stream. Please come by. I'm going to do it at 8 p.m. Central Time on Friday. So keep a lookout for that. I'll see you guys on Friday.